What if I told you the US government has a secret treasure, officially worth around $11 billion, but in reality, it's valued at over $1 trillion? What if I told you that most of the money in your bank account wasn't printed by the government, but was literally created out of thin air by private banks the moment someone took out a loan? And what if I told you that the most powerful financial institution in the world, one that can change the value of your savings overnight, is run by people who were never elected? All of these puzzles are connected. And if you can solve them, you'll understand why gold has smashed through $4,000 an ounce in 2025, and who really controls your money. Let's start with the first puzzle, the secret treasure. Deep inside vaults beneath Fort Knox and other U.S. reserves sits over 8,000 tons of gold, the largest government stockpile on Earth. But on the official books, that gold is still valued at $42.22 an ounce, a number set in 1973 and never updated. That's why, on paper, it's only worth around $11 billion. But in the real world, that same gold, at over $4,000 an ounce, is valued at more than $1 trillion. Imagine if the government decided, overnight, to revalue it at market price. America's balance sheet would instantly look a lot stronger, and the US dollar could be backed by one of the largest hidden assets in history. This isn't just trivia, it's potential power. The gold sitting in those vaults isn't being traded, but it represents a kind of financial nuclear weapon. A tool that could be used, in theory, to reset confidence in the dollar if things ever got truly bad. That's our first clue in understanding who holds real power over money. Now, let's move to the second puzzle, where money actually comes from. When most people imagine money, they picture cash printed by the government. But that's only a tiny fraction of what exists. In reality, the vast majority of money is digital, and it's created when banks issue loans. It works like this. When you deposit $1,000 in a bank, that bank doesn't keep your money locked away. It lends out most of it to someone else. That loan gets spent, deposited again, and the cycle continues. With each step, new digital money is created. It's a system that multiplies debt into money. It's efficient, but it also means our entire economy is built on borrowing. Every new loan adds to the total supply of money, and every repayment, theoretically, destroys it. The problem is, to keep the system growing, there must always be more debt. That's why the total amount of money in the system keeps expanding, and why inflation is not a bug, but a built-in feature. And the people managing this balance between creation and destruction aren't elected. Major financial institutions, such as central banks, play a crucial role in the global economy. Their decisions can influence interest rates, inflation, and economic growth worldwide. That leads us to the third puzzle. Who actually controls this system? Enter the Federal Reserve. The Fed doesn't print most of the money directly, but it controls the price of money, interest rates. When the Fed lowers rates, borrowing becomes cheap, banks lend more, and the system floods with new money. When they raise rates, money dries up and economies slow down. In the past few years, we've watched this play out in real time. After years of ultra-low rates and easy money, the Fed began hiking interest rates aggressively in 2022 and 2023 to fight inflation. By 2025, inflation cooled, but the cost of that was enormous. Record high government debt, shaky credit markets, and a new wave of concern about whether the system itself can keep functioning without constant intervention. And the people making these trillion-dollar decisions? They're appointed, not elected. The chairman of the Federal Reserve, right now Jerome Powell, holds more real-world influence than almost any politician alive. He can, with a single statement, make markets rise or crash, shift currencies, and even alter the value of your savings. So, when you connect the dots, the hidden trillion-dollar gold stockpile, the debt-based money creation, and the unelected controllers of monetary policy, you start to see the full picture. We live in a system where money is constantly being created from debt, managed by a handful of unelected technocrats, and intentionally designed to lose value over time. That's why gold has soared past $4,000 in 2025. It's not just investors chasing profit, it's a global signal of distrust. People are trading their paper promises for something real, something tangible, something that can't be created by typing zeros into a computer. Gold isn't just an investment anymore. It's a vote. A vote of no confidence in the current system. But here's the final twist. The world might already be moving toward a new kind of money. What if instead of physical gold, the next chapter of this story is written in digital code? A decentralized currency that no government or central bank can print, control, or devalue. That's the promise and the controversy of Bitcoin. So here's the question I'll leave you with. Is Bitcoin the ultimate solution to the money puzzle, or just another illusion waiting to burst? If you enjoyed this breakdown and love exploring the stories behind money, don't forget to share this video and subscribe to the Unscripted show, where we decode the world's biggest financial riddles, one mystery at a time.